Nvidia is now the largest company in the history of capitalism, and on Wednesday night, Jensen Huang has to walk onto stage and convince the world that he's only just getting started. Here's what to watch and the one question every Nvidia shareholder needs to answer before the print drops. If you're interested in long-term investing and you're looking for tips, advice, and strategies, subscribe to my channel. I post at least 5 videos per week on those subjects. Now for the topic of today. $5.7 trillion. To put that into the context, that's the entire stock market of Germany, larger than the GDP of Japan, and if Nvidia were a country, it would be the third largest economy on Earth, behind only the US and China. One company making one product sold mostly to 7 customers. And on Wednesday, we'll find out if the math behind that number still works. 3 things converged this week, and you need to understand all of those if you're interested in investing in Nvidia. 1. Nvidia reports on Wednesday after the bell. This is the biggest earnings event of the year, full stop. More market cap moves on this single call than on most countries' stock exchanges in an entire quarter. 2. Reuters reported on Thursday that the US government has approved a list of Chinese companies to buy Nvidia's H200 chips. And the list is not small. Alibaba, Tencent, ByteDance, JD.com, 4 of the largest technology buyers in Asia, suddenly cleared to spend. And the stock hit a new all-time high on that news. Lastly, number 3, Jensen Huang flew to China last week at the request of President Trump, and whatever was discussed there will get unpacked in the call. And Wall Street is going to be listening for one word: deals. So the setup is record valuation, freshly opened China market, and a CEO who just had a closed door audience with the president. Every bull case in the world is priced in. The question is what happens if any single piece of that wobbles. For 18 months, the biggest overhang on Nvidia was export controls. China was off the table. 20+% of the addressable market gone by a national security decree. And this week that inverted. The H200, Nvidia's current generation flagship, was just cleared for sale for the 4 buyers who matter most in China. So that should be unambiguously bullish, and in the short term it is. But here's the trap. When the last bear case dies, that's usually the moment to start paying closer attention. Because when there's nothing left to worry about, there's nothing left to climb. And the stock price isn't pricing in good news anymore. It's pricing in all of it, and that's the setup for this Wednesday. The bull case is genuine and I want to give it full credit. If Alibaba, Tencent, and JD are actually cleared to buy H200s at scale, that's not a press release, that's a structural expansion. China hyperscaler AI capex is estimated in tens of billions of dollars annually, and Nvidia was mostly locked out of that until recently. If that gate opens even a little bit, the forward revenue model has to be rebuilt upwards. Analysts haven't had time to digest this yet, and Wednesday is guidance for when the new number gets stamped. If Jensen comes out and confirms multi-billion-dollar China orders for the next 4 quarters, the stock has another leg, and probably a big one. Now for the bear case, and this is what concerns me. Nvidia is now roughly 8% of the entire S&P 500. If you own an index fund, you own Nvidia, whether you choose to or not. If you own the Magnificent 7, you own Nvidia twice. If you own a Nasdaq fund, you own it 3 times. The concentration in this single stock across the global financial system has no historical precedent. And that brings me to a psychology piece, which I think matters more than any number on Wednesday's report. There's a concept in behavioral finance called loss aversion. Daniel Kahneman won a Nobel Prize for the work behind it, and the finding is simple. Losing $1 hurts about twice as much as gaining $1 does. Losing $1 hurts about twice as much as gaining $1 feels good. And you combine that with something called the endowment effect, which is the tendency to value something more simply because you own it, and then you get caught into a very specific trap. Holders won't sell even when the thesis cracks, because selling means admitting the gain is gone and the asset is gone. 2 losses for the price of 1. Now that's not saying Nvidia is going to disappear and it's doomed to failure. Of course it's going to keep growing. But you have to ask yourself a question. If you didn't already own Nvidia, would you buy it on Tuesday at $5.7 billion valuation before this print comes out? Personally, I'm not selling Nvidia. The business is real, the moat is real, and the China deals genuinely move that forwards even more. But I am going to be trimming a little bit of profit, Because I've already made good returns on that, and letting a single stock dominate too much of my portfolio starts to put the risk in uncomfortable positions, and I want to get returns on my investments ultimately. After the news on Wednesday, I will probably continue to dollar cost average into it at reasonable prices and based on the valuations, if it's undervalued, if it has a good buy-in price. And I'll be watching closely on Wednesday to see if those new deals come through from China, because I think that's the main thing that's going to move it forward. And that becomes less of a quarter pop, but a multi-year growth potential. So that's my thesis, and if you found this useful, please subscribe to this channel and like, comment, and share with your friends. I post at least 5 of these videos every single week.